Okay, let's dive into the source material you've shared. We're looking at the property and casualty insurance tech space.
Right, which is, well, it's going through a really big shift, wouldn't you say?
Absolutely. This whole move away from the old legacy systems onto these modern cloud platforms is huge.
And Guidewire is right in the thick of it, a major player here.
Yeah, definitely. So your sources focus on their recent results, Q3 fiscal 25.
That's right, the quarter ending April 30th, the results and, all the commentary around them.
Okay, so our mission here really is to cut through the numbers and figure out what's actually going on. What are the real trends?
And what does it all mean, right, for Guidewire, and maybe even for the whole P&C tech industry? Where's it headed?
Because the sources seem to paint a picture of a really strong quarter.
Yeah, potentially some serious momentum building, especially around that cloud adoption piece.
So let's jump straight into those headline numbers. They definitely tell a story. Total revenue for Q3 fiscal 25 was $293.5 million.
Which is a solid jump, 22% up from the same time last year.
Impressive. But the metric everyone watches for companies like this, it's the ARR, right? Annual recurring revenue.
Exactly. And they hit a big number there, $960 million as of April 30th.
$960 million. Okay, put that in context for us.
Well, think about it. End of last fiscal year, July 24, they were at $864 million. So that's a big step up.
And one article pointed out that's like a 12% sequential jump just from Q2.
Yeah, that sequential growth is significant. It shows the pace is picking up. That $960 million really underlines how their core business model is solidifying around subscriptions.
So ARR, just remind everyone, that's basically the annualized value of their current customer contracts, the predictable income stream.
Spot on. It's the lifeblood of a SaaS business, the subscription and support money they expect over the next year.
And leadership sounded pretty confident about hitting that next big milestone.
Uh-huh. The $1 billion ARR mark. They seem pretty sure they'd hit or maybe even beat that by the end of this fiscal year. It's clearly been a major target.
Okay, so where's the growth coming from specifically, if we break down the revenue streams?
Subscription and support is definitely leading the charge. Came in at $181.8 million.
And the growth there was?
Huge. A 32% increase compared to last year.
Wow.
Yeah. And what that really tells you is this cloud migration thing. It's not just theory. It's happening. And it's accelerating for Guidewire's customers. Big time.
You can see that shift in the overall mix too, right? Recurring revenue, subscription, and support is now a bigger slice of the pie.
Exactly. 62% this quarter. Last year, it was 55%. So that clearly signals that move away from the old license model.
What about services revenue?
That was healthy too. $54.5 million, up 17%.
And that's linked to implementations, getting people onto the cloud.
Pretty much.
Yeah.
Strong bookings, higher utilization. When you move to a big new platform like this, there's a lot of work involved. Implementation, customization, data mapping.
Right. It's
Well,
complete.
that services growth reflects customers doing that heavy lifting. And the sources noted it's becoming more of a predictable recurring stream itself now.
Interesting. And then there's the old license revenue, $57.2 million,
Yeah, a much smaller increase there, only 2%.
which makes sense given the shift.
Exactly what you'd expect.
Yeah.
As customers move to subscription, the traditional license sales naturally taper off. It fits the narrative.
Okay, let's switch gears a bit. Away from the top line, what about profitability? Sounds like there was improvement there too.
Definitely. Now, companies like Guidewire often talk about GAAP and non-GAAP results.
Right. Generally accepted accounting principles versus the adjusted view.
Yeah, and they often focus on non-GAAP because it excludes things like stock-based compensation, amortization, stuff that isn't direct cash operational spending. It can give a clearer view of core performance.
But it's important to remember the GAAP numbers too for the full picture.
Absolutely, GAAP includes everything.
Yeah.
But sticking with the non-GAAP view highlighted in the sources, their non-GAAP income from operations was $46.1 million for Q3.
How does that compare?
Big jump. It was $20.8 million in Q3 last year. And this comfortably beat expectations.
And the bottom line, non-GAAP net income and earnings per share.
Also very strong. $75.2 million in net income, which works out to $2.88 per share for the quarter.
And last year.
$21.7 million and 0.26 per share. So a massive increase. One source called out that 238% jump in non-GAAP EPS specifically.
That's significant. And you mentioned GAAP income.
Yeah, notably, their GAAP net income actually swung positive this quarter too, $46.2 million. So profitable even by the standard accounting measures.
Good sign. What about margins? Non-GAAP gross margins.
Overall was 65%. But the subscription and support gross margin was the real eye-catcher at 71%,
Up from what?
66% last year. Now, they did mention getting a little boost, about a $4 million credit from a cloud provider in the quarter.
Oh, okay.
But even if you factor that out, the underlying trend is definitely positive. And services gross margin improved too, up to 13% from 10%.
So it looks like they're making real progress towards those longer-term margin goals they've talked about.
Yeah, they chalk it up to getting more scale on the platform, plus all the investments they've been making starting to pay off.
And financially, how are they looking overall? Cash position.
Pretty solid. Over $1.2 billion in cash equivalents and investments as of April 30th.
That's up from the end of last year?
Yep, up from $1.13 billion last July. Part of that increase came from issuing some convertible notes back in October, but also just solid operating cash flow.
They also dealt with some maturing debt, right? The 2025 notes.
That happened in March. Involved about $100 million cash going out, but they actually ended up with a small net share accretion. Bit complex, but basically the shares they got back from a related hedge offset the shares they issued. Seemed like they managed it smoothly.
And operating cash flow itself?
Generated $32 million in Q3. Yeah. They put that down to strong collections from customers.
So given all this strong performance and the clear momentum, they updated their outlook for the full year.
They did. Raised guidance pretty much across the board.
Starting with that key ARR number.
Right. They lifted the target. Now expecting between $1.012 billion and $1.022 billion.
Which implies
Strong growth, between 17% and 18% year over year. And leadership was quite specific about why.
What did they point to?
Strong execution, a healthy pipeline, but also, and this is key, record low ARR attrition percentages and record high ARR ramping activity.
Okay, break that down. Record low attrition.
It means customers are sticking around, they're not leaving the platform, very important for subscription models.
And record high ramping activity.
Means those new cloud deals and expansions are coming online and hitting their full revenue potential faster than ever before. Both are really positive signs for the health of the business.
Makes sense. They also raised the total revenue target for the year.
Yep, now between $1.178 billion and $1.186 billion.
And operating cash flow guidance got a big boost too.
Significant lift there. Now expected between $255 million and $275 million. They cited the strong revenue, good collections, and keeping a handle on expenses.
And the non-GAAP operating income outlook?
Also raised to the $187 million to $190 million range for the full year.
Okay, so the numbers look great. The outlook is positive, but, numbers are only half the story.
Absolutely. What's the actual business activity driving all this?
Guidewire talked about record Q3 sales activity. What does that mean in practice?
Well, they closed 17 cloud deals in the quarter.
17? In 3 months?
Yep. 14 for their main Insurance Suite platform, and 3 for Insurance Now, their solution for smaller carriers.
That sounds like a lot. Is it an increase?
It is. They did 12 cloud deals in Q2, so 17 suggests things are speeding up. And they saw real strength at the top end of the market.
Toning.
7 deals were with Tier 1 insurers, the really big ones, and 3 more with Tier 2. Landing that many Tier 1s in one quarter? That's a big deal in enterprise software. It's a strong validation.
And what types of deals were there? Migrations, new customers?
A good mix, actually. 9 were existing customers migrating to the cloud, 5 were brand new customers coming onto Guidewire, and 3 were expansions from current clients.
So broad-based growth, not just relying on one area.
Right. And they also mentioned good traction with Insurance Now, the platform for smaller and mid-sized guys.
3 new wins there.
Including 2 of the biggest deals they've ever done for that product line. So they're showing they can serve the whole market, not just the giants.
And they said Insurance Now is opening doors for C-suite conversations.
Yes, especially as they integrate more capabilities like pricing and indemnity management. It elevates the discussion beyond just IT.
What about internationally? Still a growth area?
Definitely. They mentioned significant cloud activity up in Canada, new wins across Asia-Pacific and EMEA.
Including that bid deal in Japan.
Exactly. A notable expansion there involves about a $60 million investment commitment over 5 years, plus multiple deals with Zurich Group across Europe.
And success breeds success, right?
Yeah.
Local project wins help.
Hugely important. Seeing successful cloud projects in your own region or country gives other insurers confidence.
Which brings us to go-lives. Getting customers actually using the platform.
Crucial. They had 10 customers go live on Guidewire Cloud in Q3.
Any big names?
Cincinnati Insurance Company was one they highlighted. These successful deployments, that referenceability, it's absolutely vital for winning the next deal. the next expansion.
Okay, now this next bit sounds really interesting from a product perspective. They sold their first Guidewire industry intelligence solution.
Yeah, this is pretty cool. It's essentially a pre-built predictive model that plugs right into the claims workflow.
And it's built using.
This is the key part. It leverages anonymized data drawn from across their cloud customer base. Think about the work involved in doing that securely and privately across so many different insurers. It's a significant technical feat.
So it's not just a new product, it's something only possible because of their cloud scale.
Exactly. It offers unique value. Imagine you're a smaller carrier, or maybe a bigger one, moving into a new market segment where you don't have much historical data.
This gives you predictive power you couldn't build yourself.
Precisely, or not easily anyway. So it's a potential revenue stream, yes, but also a powerful differentiator for the cloud platform itself.
And it changes the conversation they can have.
Right. Moves it from just talking about running the business efficiently to actually discussing insurance results and how to improve them.
They also mention an acquisition, Quantis, pricing and rating tech.
That's right. They're integrating Quantis technology. The idea here is to help insurers not just run their pricing calculations, but actually design their pricing strategy more effectively.
How so?
It's about giving them more agility, the ability to quickly change rates, underwriting rules, even product definitions without being held back by technology bottlenecks. Pricing is so core to an insurer's business.
Makes sense. And one last piece, the developer community.
Seems very active. They highlighted a recent developer summit in Bangalore with over 1,500 people from partners and customers.
That sounds like strong engagement.
It does. And it shows they're investing in making the platform easier to work with new developer tools, AI assistance for coding, easier access to cloud data, tools for building models, even virtual development environments. Keeping that ecosystem healthy is key long-term.
Okay, so let's try and connect all these dots. What's the big takeaway from this strong Q3 about Guidewire's position?
Well, the clearest signal, I think, is that insurers are increasingly seeing the Guidewire cloud platform not as some future possibility, but as, mature. It's flexible, it's proven, it's ready for prime time, even for complex transformations.
And that platform's agility is helping them adapt to market changes, like shifts in lines of business.
Exactly. Things like the move towards excess and specialty insurance, or maybe even closing some of those coverage gaps we hear about by letting them roll out new products or pricing faster.
So Guidewire is really riding that big wave, the whole P&C industry moving to the cloud.
They certainly seem to be capitalizing on it. The sources position them as the leader, pulling ahead of older legacy systems, maybe even some newer competitors. If you're watching this space, that's a key narrative.
They also talked about generative AI, didn't they?
Mentioned specific ideas, making claims, and underwriting more efficient, helping developers write code faster, things like that.
But with a caveat.
Yeah, an important one. True modernization isn't just about putting an AI layer on old processes. It's about rethinking the processes themselves, which they argue their modern platform enables.
And that big cash pile, over $1.2 billion, gives them options.
For sure. Flexibility for more R&D, maybe more acquisitions like Quantis, whatever they need to do to keep strengthening their position.
So wrapping it up, the picture from the sources is, well, an exceptional Q3.
Yeah, driven by that accelerating cloud momentum, really strong sales across the board, different customer sizes, different regions, plus strategic moves like pushing internationally, launching new data products like industry intelligence, and buying key tech like Quantis.
And leadership sounds genuinely bullish about the path ahead. Hitting that billion-dollar ARR milestone seems almost a given now.
Their confidence definitely comes through. They see themselves not just as a vendor, but really as a central architect shaping how the P&C industry digitizes and adapts for the future.
Okay, so here's a final thought for you, our listener, to chew on after this deep dive. As these cloud platforms aggregate more and more anonymized data and AI tools like Guidewire's industry intelligence become more common, how might that fundamentally change the game? How might insurers identify risk, price policies, or even handle claims 5 or 10 years down the road? Something to think about.